What's up, traders? My name is Layla and welcome back to this week's no-nonsense market recap from Bullish Bear. This week's Fed decision was the most anticipated, and it wasn't exactly sunshine and rainbows. Officials at the Federal Reserve left interest rates unchanged as they braced for the effects of President Trump's policies on trade, taxes, and immigration. Fed Chair Jerome Powell remarked that uncertainty is unusually elevated. And it certainly is, as oil keeps climbing, stocks have been teetering all week, and the Middle East crisis continues without a quick resolution in sight. Traders are actually bracing for increased market choppiness as the Middle East conflict continues. President Trump warned Tuesday that he's losing patience with Iran and has called for their unconditional surrender. He made it very clear that the US knows exactly where the country's leader is, but won't take him out. At least, not yet. The crisis prompted the president to bail on the G7 summit in Canada a day early this week to focus on damage control. This means the tariffs and other issues have been shoved to the back burner for now. President Trump did, however, address one burning question, and that was whether the social media giant TikTok would be going down later this week. Trump said he will probably extend the TikTok ban deadline once more ahead of its Thursday, June 19th expiration. He told reporters aboard Air Force One, "We probably need to get China's approval, and I think we will get it." Earlier this week, the president also greenlit Japan's Nippon Steel takeover of US Steel. This wasn't your typical corporate handshake either. US Steel and Nippon were required to sign a national security agreement that gives the US government a golden share, basically handing the president unusual influence over a private company, but could serve as a blueprint for deals ahead. Meanwhile, new data showed US retail sales took a bigger hit than expected last month, shrinking 0.9% from April and 0.3% if you exclude vehicle sales. This versus the 0.7% decline that was anticipated. Both the May CPI and job reports were also cooler than expected. Housing starts and retail spending saw surprise slumps. A survey this week revealed that central banks across the world are scooping up gold at a record pace and plotting on a long-term shift away from US dollar reserves. According to the World Gold Council, 95% of central bank respondents expect global gold reserves to rise over the next 12 months. 43% say they plan to increase their savings during that time. Simultaneously, 73% of central banks expect a moderate or significant decline in US dollar holdings within global reserves over the next 5 years. Citi analysts are calling gold to hit $2,500 to $2,700 an ounce by the second half of 2026. So far this year, the precious metal is up about 27%. It's been relatively quiet on the Bitcoin front as digital currency has hovered near its highs. But investors learned that the largest corporate holder of Bitcoin, MicroStrategy, reported in a filing that they have purchased a staggering $1.05 billion worth of coin this month. With this kind of purchase, it's evident they're feeling bullish about Bitcoin's future. As tensions around the world rise and conflict in the Middle East continues, one thing is for sure, and that is investors are being kept on their toes. Who's to say what will be in store for next week? For more updates, tune in next week as we continue to track the market's every move, and subscribe down below to Bullish Bear for more market recap videos. Until next time, stay disciplined, manage your risk, and remember, bears make money, bulls make money, but pigs get slaughtered. See you in the trading room.